Nick Santiago. Thank you all for tuning in. Today I'm going to show you more of a trade lesson of a stock that gets hit after earnings on a stock like Cold Stores today that is just getting absolutely annihilated. Where would you want to be a buyer of the stock? So let's just look at some support levels right off the charts here. First support level you're going to see is going to be right over here at this 200-day moving average on the daily chart. Then you got a nice gap fill. But to be a real buyer where institutional money is going to come in and support this equity, believe it or not, you're going to have to look lower. First off the bat, the stock topped out in April, made a little lower high, and then another lower high. That's a bearish pattern to begin with. Then you get the earnings news today. The stock is just absolutely decimated, selling off by more than 11% at this moment in time. That tells us we have to look lower. So the one thing I like to do is to go over to the bigger time frames. I say, all right, let me get away from this daily chart, which carries a lot of noise, and let me go to something that's a little bit more clearer, more precise. And then I look at the chart and I say, wow, look at this. Over here, this is where the stock based, had a bearish pattern here, and it rallied. So right off the bat, that $60 level catches my eye. However, when I look back on the chart, I say, wow, what happened here? And this was right around $59, $58. There were a couple pivots. You had a pivot here, a pivot here. That tells me right off the bat that, hey, that's going to be a good level. That's where the institutions were distributing stocks. See how it pivoted up there, came back down, pivoted up there, came back down. And then over here, they really sold it off sharply. And then all of a sudden, the market found some stability, put in a base, and broke out. So what I like to call that is the scene of the crime. And that's something I'll be teaching in this Saturday's webinar on the 16th of May at 10 o'clock in the morning. We will be hosting an InTheMoneyStocks Methodology Revealed webinar. We'll show you all of my techniques. But the one thing I want to point out is this is where I would get interested in the stock, right around the $58 area. This is going to be where the institutions, in my opinion, will come in and save the equity and take it right back up to the upside. So again, there will be some minor bounces out here like we showed you. You'll probably get a little bounce around that 200, a little bounce around the gap, maybe $62. But your ultimate buy level where this stock can put in a real solid bottom would be around the $58 area, give or take, 20, 50 cents. But right around there, that's where the institutional money wants to get involved in this equity. So again, that's the level you want to keep on your radar. It may take some time, may take a couple of weeks to get down there, may take a month or two. But eventually, a stock like this, which sells off this sharply and has been making lower highs, it is telling you that it wants to go lower, and it ultimately will go lower. And remember, the market is set up to trick most people most of the time. It's only the few people that can make money in this business that will be around for the long term. So again, this is your level to get involved. This is where the institutional money is going to get involved. This is where I want to be involved. Other than that, I'll be involved for short-term plays, but if you're looking for a solid bottom, this is the place where I would look, down around 58 bucks. With that being said, everybody, I want to wish you all a great trading day. Hope everybody is having a good session out there, and we will see you on the charts.